Today I want to teach you a new concept, and it's the word capitalizing. Now, capitalizing is always to do with interest. Okay? So, basically what it means, something can be interest, specifically interest can be capitalized or it can be not capitalized. And you know, it sounds very intense, but it literally means the following. So, if I have a loan, there's my loan. Please stop talking. I have a loan, and my loan is 10,000 Rand. And every month I pay 1,000 Rand, it accumulates 1,000 Rand interest. So if the interest on loan is 1,000 Rand, nee, you understand this entry that I made. Nee? So now I can say the interest is capitalized. Then what it means is I'm going to write it to the loan. Meaning I'm borrowing the interest also. So now my loan is growing. And if I do not pay enough to cover that interest, I'm going to start paying interest on the interest. Does that make sense? No. Of course it makes sense. Let me tell you again. Let's understand this. So let's say I pay on the loan 1,000 Rand. Can you see it would just cancel out the interest? So I haven't paid back anything on the loan actually. If I pay back 1,500, the first 1,000 would take the interest out, and my loan would just become 9,500. Okay, you guys get it. But now let's say I only pay 200 Rand. Can you see it will be that my interest just gets less to 800 because I paid 200. So next month my loan is no longer 10,000, it's now 10,800. So now my interest is going to be more because I'm going to pay interest on the interest that I didn't pay. You get it? Yeah. It's just, that's how it is. Now, so this year we call capitalize. I capitalized the interest. Meaning I wrote the interest to the loan. Okay? Can you see in the income statement, my interest is still 1,000. No effect there. But in the balance sheet, my loan is no longer 10,000, it's now 11. Because I capitalized the interest. Capitalized just means I'm making the interest part of the original amount.
Can you make this a real life example?
This is a real life example. Okay, let me show you. I'm just going, please listen. So, this process here is if I capitalize. If I don't capitalize, I will have my loan 10,000. Right? My interest on loan 1,000. But now because I am not capitalizing it, it means I pay it straight. You see? So can you see my loan stays the same? So if I want to pay off on the loan 1,000, I would say bank 1,000, then it would make the loan itself less. Whereas here, I make the interest part of the loan. So I just pay off the loan.
Yes, see, understand.
You guys get the difference. So I repeat. Let me repeat.
And they were question.
I want to repeat this first before I do questions. So the first option literally is when I capitalize, I work out my interest every month, but I include it in my loan. If I don't capitalize, I pay it straight. You see? Questions? Okay, can I tell you this? I do not understand why we still do the second option in school with a loan. Because according to the credit law of South Africa, interest is capitalized. So the banks do this automatically. So I can tell you in school accounting, in the past few years, they have never asked you not capitalized interest on loan. It's always this. Okay? With a fixed deposit, it's different. Yes.
Now, let's say I've been paying for 10 years interest. Doesn't my loan?
Yes, it does. And remember now what happens, the longer you pay off, the smaller the amount your interest is calculated on becomes.
Interest decreases as you pay.
Yes, because now what happens, let's say I paid 1,005 here, now my loan is going to be 9,500. So next month I still pay 1,005, but now my interest is 950. You see? And now it means I pay more on the 9,500.
Ma'am, but the interest banks like doesn't like minus the
Look, let me show you the big one. Please stop talking. Here's my loan. I have a balance of 10. Now I have interest capitalized 1,000. My monthly installment on my loan is fixed at 1,005. So now my new balance is going to be what? 11 minus that, it's going to be 9,500. You get me? So next month my interest is going to be 950 because the amount they calculate the interest on is becoming smaller. You see? Now I still pay 1,500. So now my balance next month is going to be what? 9,500 plus 950 less 1,500. Now it's 8,950. Can you see now a bigger portion from that 950? So here 1,000 went to interest, 500 went to the loan. When I get here, 950 goes to the interest, 550 goes to the loan. So how the process goes on and on and on, as the interest, so as the time goes by, the amount that you pay off on your loan, will start getting bigger. That's why I'm saying the first 10 years of the 20 you basically pay interest, and then suddenly you hit where it starts paying off more because your interest becomes subsequently less.
So they add the interest immediately after you got the loan.
So the first month. So they work it on 30 days, 30 days, 30 days. Can I say the biggest way to save is to pay your first installment immediately when you get the loan. Because then the loan hasn't run interest yet. So then that full amount goes off on your loan. So you're already a little bit ahead. A lot of people also save money by, so when you have a mortgage loan, a house loan, you have what they call a flexi reserve. So everything that you pay more than the installment goes into the flexi reserve. So if I need money, I can go draw that flexi reserve. So then I borrow that money at the home loan interest rate, which is way lower than a private loan interest rate. So what a lot of people would do, for instance, because what we don't realize is in the bank, they actually calculate your interest daily. And then you only see it once a month. But the interest is calculated daily. So what a lot of people would do is, I'm getting paid on the 20th, but my debit orders only go off on the 1st. So there's 10 days. So what people do is they take their whole salary, they put it in their mortgage loan. And then the day before the 1st, they transfer it back to their current account. So then they save the interest for 10 days. They save the interest on the interest is calculated on a lesser amount. You get what I said? You understand? So what other people also do, a lot of people also do, is savings. They would save. They call it, they are saving on their loan. So let me explain to you. At this stage, I can only explain from my own life. So a home loan has an interest rate from about 9.5% at this stage. A credit card interest at this stage is between 18 and 21%. So can you see this is cheaper monthly finance? Okay. So people will rather buy from their home loan, borrow extra on their home loan, than buy with the credit card because it works out cheaper. So, what some people will do, but now savings as well. My fixed deposit, so at this stage, a fixed deposit earns about 6%. So, can you see, if I say, for instance, I got a payout. Say I was in a car accident and I got a third-party claim, and it's 300,000. Can you see I will earn more interest by putting that 300,000 on the home loan in my flexi reserve, so I can use it whenever I want. But I'm saving 9% interest a month, which is more than the interest I would earn. And also, it makes the capital amount, in other words, the original loan amount, less, so I'm paying less interest. Can you see how people work this? Another thing that makes it good to save this way is they can't tax you on this. If you save any other way, the interest that you earn is taxable because it's seen as an extra income. So if you save on your home loan, it's you do a double thing. Can you see? Yes. Can be taxed, yeah. But it has to be over a certain amount of interest. I'm not quite sure all the fine script. But if you have a fixed deposit of 10,000 and you earn like 100 rand, you're not going to be taxed.
Yeah.
But once it goes over a certain amount, it will be taxed. Yeah.
How do you know, like, okay, you just go, yeah, see there you said interest, the interest was 1,000.
Mm.
Yeah. Now it's 900.
I just worked on 10% of the outstanding. This is just an example. Remember, a bank has got algorithms that runs the whole time. So the interest on loan is linked to the bank rate, which is determined by the Reserve Bank. So that doesn't change daily. It only changes when the bank rate changes.
So how would we calculate it when it's like that?
How?
How would we calculate it when it's like that?
When it's like what?
Like that, like how? Okay, they give us the rate. Like,
In a test, they will tell you the percentage. And actually what they will do is we're going to do a T account to calculate the interest. I'm going to show you. So this guy is not capitalized, right? Meaning I pay the interest every month. That's what I do. So now if I look, my loan is a liability. We have a balance of 60,000. Ne? Now my interest on loan, I see I have a balance of 6,000, meaning I've already paid 6,000. Now, can you see behind the loan in brackets it says 16% per annum? So that's the interest rate on this loan. Okay? Now they say, make the adjustment entry for interest on loan. The loan was taken out on the first day of the accounting period and interest is not capitalized. Okay? I look and I say, okay, it's from the start of the accounting period, so I added the whole 12 months. So if I say the loan times the 16% interest, I get what is my interest? Is it 9,600?
Yes.
960. 9,600. It can't be 960. No, you don't times with 12 because it's already, it's 16% per year. So it's 12 out of 12 months. So it's literally times 1. So it's 9,600. 960.
96,000.
Yeah.
96 puppy.
Yes. Yeah. So now, can you see? My interest is 96. This would be the amount that I want to go to the income statement. This is my expense, right? So my profit and loss is 96. But what do I see? I have only paid 6. So the difference is 36, and what is that difference then? Accrued expense. Why? Because it's an expense applicable on this year that I have not paid. See? Where did I get? This, I said 96 minus 6 gives me 36. I just balanced. So, when I go now to my books, the 96 will go to the income statement and the 36 will go to the balance sheet as a payable. Ne? Because you can see there it's a liability. And my loan itself will be 60,000. Okay? Didn't change. Because I didn't add the interest to the loan. Okay, everybody with me? Okay? Can I? Still busy. Okay? It's an accrued expense because if I look at this, I'm supposed to pay 16% interest a year on this loan, which is 9,600. Now, if I go look at my interest on loan, I can see I've only paid 6,000. So I still short. I still need to pay 3,600. I'm behind in my payments. Does that make sense? Yeah, no. Remember, your nominal accounts, you always close off the end of the financial year. So it starts on a 0 on the 1st. Okay, it's just the balance sheet that keeps running. The balance sheet runs all the time, but not the nominal. Okay, let's go to capitalized. Okay, so let's do this. My loan is going to be 60,000. I've got 3,600. accrued expense, and interest on loan is going to be 9.6. The amount to the income statement is the 9.6, and to the balance sheet is the 3.6, and it goes to payables. Now you will see this exercise here, the capitalizing is exactly the same information. It's just I'm going to write it up differently. Okay, so now my loan is still 60,000. Nee? My interest is still 6,000. 6,000. I calculated my profit and loss to be 9.6, meaning the difference here is 3.6. But I'm not going to say accrued expense because they say I capitalize interest, and that means I'm going to take it to the loan, the 3.6. There it goes. That's basically what happens. So the word capitalized means I just take it to the loan. You guys sharp? So now, we have an accrued expense if the interest is not capitalized. We have a loan entry if the interest is capitalized. So what they are basically saying is that 6,000 is already included in that 60. Whereas with this one, the 6,000 is separate from the 60. Okay? Yes. You can, but I cannot see. So theoretically, yes, you can get it, but I cannot see how it's practical that you paid interest in advance. I don't know. Okay. So if I go to my trial balance now, I'm going to say my loan is now 63,600. Can you see? It's no longer separate. It's now one thing. And my interest on loan is still 9.6. Can you see the nominal part stays the same? It's 9.696. It's just about how do I classify that outstanding interest. That's all it's about. Okay. I am going to stop.